Imagine this, you go to sleep one night after making an extra $100 million that day, and when you wake up, you owe almost nothing in taxes on that gain. Sounds impossible, right? But for a small slice of America's richest, this happens. Today, I'm pulling back the curtain and showing you how the rich legally avoid paying huge tax bills and how you can learn from the same mindset, even if you're not a billionaire. Hey everyone, welcome back. I'm really glad you're here, because what we're about to talk about might completely change how you think about money and taxes. See, most people work hard, get their paycheck, and just accept that taxes take a huge bite out of it. But the wealthy, they don't accept the system, they study it. They play by the same rules, just smarter. And before you roll your eyes thinking, that's for billionaires, not me, let me tell you the principles they use. You can absolutely apply on your own level. Because this isn't about cheating, it's about being strategic. Let's start with a story. Take Warren Buffett, one of the richest men in the world. Between 2014 and 2018, his net worth grew by around $24 billion. Do you know how much he paid in federal taxes during those years? Just a few million. That's about 0.1% of his wealth growth. Now, how is that possible? The secret is simple but powerful. He didn't earn his wealth as salary. He built assets that grew in value. And as long as you don't sell those assets, you don't owe income tax. Another popular strategy among the rich is something called buy, borrow, die. They buy appreciating assets like stocks or real estate. Then they borrow money against those assets to fund their lifestyle, since loans aren't considered taxable income. And finally, when they die, those assets get a step up in cost basis, meaning their heirs can sell them without paying taxes on all that earlier growth. That's the hidden game. The system rewards ownership and long-term planning, not just working harder. Now, here's where you come in. Even if you're not rolling in millions, you can start thinking and acting like an investor, not just an earner. That's the mindset shift that changes everything.
Let's break down 5 major ways the rich in America legally avoid paying massive taxes and how you can use the same mindset at your level. Number 1, they earn through assets, not wages. Wages are taxed at the highest rates. Capital gains and business income often aren't. That's why the rich focus on building assets, businesses, real estate, investments. When your money makes money, instead of your time making money, your taxes go down. So even if you're starting small, aim to own something that grows, maybe stocks, a rental property, or even a small side business. Number 2, the buy, borrow, dilute. We talked about this earlier, but let's go deeper. A wealthy investor buys a stock worth $10 million. Instead of selling it and paying tax on the gain, he borrows $5 million using it as collateral. He lives off that money, pays interest, but owes no income tax. When he dies, his kids inherit the stock at a new higher value and that old growth, gone from the tax system. It's genius and completely legal. Now, for regular people, this means hold assets long-term, avoid selling when you don't need to, and if you ever borrow smartly against appreciating assets, not for short-term spending. Number 3, they use business structures and tax-advantaged accounts. Rich people rarely make money under their personal name. They make it through entities. LLCs, S-corps, and trusts allow them to deduct expenses, split income, and protect wealth. For example, business owners can write off travel, equipment, and even part of their home office. Plus, retirement accounts like a 401k or IRA let money grow tax-free or tax-deferred. So, if you're self-employed or have a side hustle, consider forming an LLC. It's not just for big companies, it's a legal shield and a tax tool. Number 4, they invest heavily in real estate. Real estate is one of the most tax-friendly assets in America. Thanks to depreciation, investors can deduct part of a property's value every year, even while the property is actually increasing in market value. They can also write off mortgage interest, maintenance, and property management. So, while the rent checks roll in, the paper losses reduce taxable income. Even small investors can use this strategy with 1 or 2 rental properties. Number 5, they give strategically. Many rich Americans use philanthropy as a financial tool. When you donate to charity, you can deduct that from your taxable income. The ultra-rich take it further. They set up foundations and trusts. They still control the assets but get big deductions right away. Now, obviously, giving should come from the heart, but there's nothing wrong with doing it in a way that benefits both the world and your finances. Number 6, they master estate planning. When rich families pass on wealth, they don't just hand over cash, they transfer assets through trusts that protect them from estate taxes.
And thanks to the step up in basis, heirs can sell those inherited assets without paying taxes on decades of growth. Even if you're not ultra wealthy, having a basic estate plan, a will, a trust, or life insurance can save your family major headaches and taxes later. Let's pause here for a second. Some people hear all this and feel angry, like the system's unfair. And you're not wrong to feel that way. But here's the thing. You can learn from it. You might not have a billionaire's bank account, but you can borrow their playbook, because what they're really doing is using the law intelligently, and so can you. And thanks to the step up in basis, heirs can sell those inherited assets without paying taxes on decades of growth. Even if you're not ultra wealthy, having a basic estate plan, a will, a trust, or life insurance can save your family major headaches and taxes later. Let's pause here for a second. Some people hear all this and feel angry, like the system's unfair. And you're not wrong to feel that way. But here's the thing. You can learn from it. You might not have a billionaire's bank account, but you can borrow their playbook, because what they're really doing is using the law intelligently, and so can you.